for a closer look at that disappointing U.S. March jobs data, we're joined by Bostajancic. She's the Director of Macroeconomic Research at the Conference Board. Kathy, thanks for joining us today.
My pleasure.
So, Kathy, employers hiring at the lowest level in 9 months. Does this mean the employment that we've gathered so far, that momentum, has gone off the rails?
Well, it does mean that the momentum we saw in January, February, where the data tended to be stronger than expected and lifted GDP expectations for the first quarter to 3.5%, is not likely to continue as we go into the second quarter.
So does this dash the hopes of an improved U.S. labor market?
I don't think so. You know, the data month to month are quite volatile. You could average the 2 months together and get something a little bit under 200,000 if you looked, we had upper revisions to February. So you really do have to be careful reading too much into 1 month's data.
Well, one of the weakest sectors was the retail sector. Retail is cutting over 24,000 jobs. How much of an impact have the tax hikes had on the retail sector and obviously consumer spending, which affects retailers?
Right, that's a great question. I was, I guess, earlier surprised that the tax increases didn't have more of an impact on retail sales and consumer spending. So maybe the retailers themselves were more spooked by the reversal of the payroll tax cut than the actual consumer, which is sort of ironic when you think about it. But we've also had a really strong run of increases in retail employment. Maybe it's just a little bit of a pause. The other thing is it could be fear of the sequester and what that does to the economy, and just that, employers are still uncertain.
So all of these concerns of the fiscal cliff and the sequester and the tax hikes, which we seemed to have sort of dismissed in the beginning of the year because we didn't really see them take a major knock on consumer confidence and on consumer spending. Now they're catching up with us with this jobs number?
It may be the case, yes. We may have a delayed impact to all of those things. And I think particularly it's the sequester, which is an unknown impact. We all do our forecasts and estimates. We have reduced our GDP number because of sequester. And Congressional Budget Office said it may reduce on net 750,000 jobs that otherwise would be created. So maybe this is just the start of it, but it's just premature now to really say for sure.
One of the interesting trends that we saw is that companies added additional hours to their current employees rather than hiring new employees. Is this a trend you think we're going to see continue?
Well, that is a trend we have seen over and over again. Whenever there's uncertainty, employers will say, why add a body that we may then later have to reduce or get rid of? It's easier to increase the hours of the existing workforce, but at some point, that's no longer sustainable. And if you look at the hours data, particularly private sector, the hours worked per week really is at a pretty high level right now.
So this obviously does not bode well for future job growth.
Well, it may, actually. I mean, ironically, the number that may not bode so well is temporary workers. Temporary workers were down in the month. But in general, if you increase the, first there's this adage, first you increase the hours before you increase the bodies. So it may be that employers were cautious, they pull back on the hiring reins, but they actually have demand for their products and services, and we could see employment pick up. But again, I don't think it's necessarily sustainable to see high 200,000 job increases each month.
One of the other concerns is the number of discouraged workers, people that are not even bothering to go look for jobs anymore, with the labor force participation rate falling to the lowest rate since 1979.
Right.
How much of a concern is this?
Well, that's a concern, and I think there's a lot of uncertainty and mystery around that as well. Why is the participation rate falling so much? Now, I think during the recession and the early part of the recovery, it was a lot of discouraged workers. But if you actually look at the number of discouraged workers over the last year or so, it's actually stabilized. So it may be that a lot of the people that are dropping in our labor force are really these the baby boomers retiring, and this may continue. It may be
that's a positive spin on it.
It is a positive spin, and it may be that the unemployment rate comes down faster than people think. And if you look back, the unemployment rate continues to go lower, and it's steadily going lower. So that is a little bit of a...
But isn't that number skewed because the participation rate declined as well? I mean, we can't really say, oh, good news, 7.6% as opposed to 7.7%, right, when less people are bothering to go out there and look for work.
No, absolutely. I mean, it's not, you want to see more employment. You don't want to just see people drop out of the labor force. But on the other hand, it may be that the demographics are really kicking in more than people think. Okay. And that is a positive spin. It actually can free up when the economy really gets stronger for the younger workers, which is what we need.
What does the disappointing jobs report mean for GDP?
Well, a few things. I mean, on one hand, again, the positive spin, I guess I can be a little more optimistic among all the gloom today, is that you actually get a little bit of productivity number. So you get 3.5% growth, and if employment didn't, keep pace with that, you actually get positive productivity numbers, which in the fourth quarter were negative. Employment growth was stronger than GDP. However, on the reverse side of that, if we start to see employment slow, that obviously means also the potential for GDP over the long term is slower.
Now, the Fed has said that it would maintain its quantitative easing program until unemployment levels come down. There was talk earlier in this week from the Fed president of San Francisco saying that they may taper off the quantitative easing program. Yeah. So does this jobs data kind of reassure the markets that the monetary stimulus policies will be maintained by the Fed?
I think so. I think it ensures at the minimum that the more dovish, and dovish I mean those who want to continue the quantitative easing and the purchases. So that's Fed Chairman Bernanke, Vice Chairman Yellen, Dudley, who's the head of the New York Federal Reserve. Their voices are going to gain strength, and I think the quantitative easing continues for longer. Yeah.
Okay, thank you so much.
Yeah, my pleasure.
Kathy Bostajancic, Director of Macroeconomic Research at the Conference Board.